In this video, we're going to talk about 10 dividend stocks that pay monthly. Before starting, please do like the video and subscribe to this channel for future updates. Stocks with monthly dividends give investors the chance to make recurring passive income. This regularity better fits the schedule of many recurring obligations, enabling an investor to use dividend income to cover their outgoings. Now, as a result, monthly dividend stocks are perfect for investors who depend on their portfolios for income, such as retirees. Here's a closer look at the top monthly high-yield dividend companies for 2022 with monthly dividend payments in mind. These stocks are excellent for generating passive income because of that combination. Early in 2022, a monthly dividend was paid on about 50 stocks, but not all of them are worthwhile for investors to take into account. Many didn't provide a dividend yield that was above average. Others appeared to be more at risk of cutting their dividends if the market situation worsens. That drastically reduces the available options. Here are the top dividend stocks for 2022. Coming in at number 10, AGNC Investment Corporation, a real estate investment trust with its headquarters in Maryland. AGNC Investment Corporation, NASDAQ AGNC, makes leveraged investments in residential mortgage-backed securities. In keeping with its prior distribution, AGNC Investment Corp announced a monthly dividend of 12 cents per share on June 9th. As of July 4th, the dividend yield for that stock was 12.54%. The stock price objective was increased to $13.25, and Keefe Bruyette upgraded AGNC Investment Corp to outperform in June. The company provided a favorable perspective on mortgage REITs, predicting that the industry will produce profitable returns in 2022. Number 9, Ellington Financial Incorporated. American mortgage financier Ellington Financial Incorporated, NYSE EFC, makes investments in residential and commercial mortgage-based securities. Although Ellington Financial Incorporated managed to drive its core earnings and dividends, Piper Sandler praised the company's performance in June but voiced concern about rising interest rates and pricing increases. In light of this, the company maintained an overweight rating on the shares while lowering its price target for the stock to $17. Ellington Financial Incorporated, which has a track record of steady dividend payments spanning 10 years, is included on our list of the finest monthly dividend stocks since its current monthly payout of 15 cents per share is at pre-pandemic levels. Prior to 2019, the company offered quarterly rewards before switching to monthly payments. The stock's dividend yield was 11.89% as of July 4th. Number 8, Stag Industrial. Another REIT paying a monthly dividend is Stag Industrial, owning industrial real estate, including warehouses and light industrial buildings, is its main objective. There's a big demand for these properties. In order to address supply chain difficulties, the pandemic hastened the introduction of e-commerce and boosted manufacturing in the United States. Due to the high occupancy rates and rising rental rates as a result, Stag has been able to provide consistently rising rental income. Over time, Stag has been able to increase its dividend. The ability of the REIT to steadily increase its portfolio expansion has been a significant growth driver. Since its IPO 10 years ago, Stag has added more than 400 properties to its portfolio, bringing the total to more than 500 buildings. Number 7, SL Green. Another REIT and the biggest office landlord in New York City is SL Green. SL Green has fared reasonably well despite some pandemic-related difficulties the city's office sector has encountered. That's mostly because of its emphasis on owning some of the best office buildings in the area. As the city's office market rebounds and office tenants concentrate on renting out excellent space for their employees, this REIT gains. The office REIT anticipates signing even more contracts in 2022 after exceeding its leasing goal in 2021. The demand demonstrates that businesses intend to keep using their offices in New York City in the future. Office buildings continue to be highly valued by institutional investors like pension funds because they produce steady revenue. As a result, SL Green was able to sell a few houses for a profit. It utilized that money to fund new projects, pay off debt, buy stock, and make acquisitions. These elements have also made it possible for this REIT to keep raising its dividend. It became a dividend achiever in 2021 after recording its 11th consecutive dividend rise. Market circumstances are improving and new initiatives are beginning beginning to pay off, so SL Green should be able to keep raising its dividend in the future. Number 6, Realty Income. Realty Income is the undisputed leader among equities that pay monthly dividends. As the monthly dividend company, it advertises itself as of the beginning of 2022, it has paid dividends for more than 600 consecutive months. Additionally, since its initial public offering IPO in 1994, Realty Income has boosted its dividend more than 100 times, raising the distribution at a 4.5% compound annual rate. This makes the REIT a dividend aristocrat with more than 25 years of dividend growth. In the future, Realty Income should be able to keep giving investors a stream of gradually increasing monthly income. In 2021, it purchased fellow REIT VEREIT, NYSE VER. Additionally, it invested almost $6 billion in smaller agreements to purchase real estate. This buying frenzy will contribute to an increase in cash flow per share of more than 9% in 2022. There's plenty of room for Realty Income to expand. The prospect for single-tenant net lease real estate, according to this estimate, is worth $12 trillion on the global market. It still has a solid balance sheet even after finishing the purchases from last year so that it can keep buying homes. Due to this, Realty Income ought to be able to keep growing its portfolio in 2022 in order to fund further dividend increases. Number 5, Pembina Pipeline. A Canadian energy infrastructure business is called Pembina Pipeline. It runs export facilities, processing facilities, storage terminals, and pipelines. The company's main business is leasing long-term fixed-rate contracts to other energy firms to allow them to use its facilities. These contracts give Pembina the ability to produce consistent cash flow. Pembina has a strong dividend track record since it has increased its payout consistently over time. As it completes more projects to expand its energy infrastructure, it ought to be able to keep raising its dividend in the future. In order to support future dividend growth, Pembina has a sizable backlog of secured projects and many more in its development pipeline. Number 4, LTC Properties. A healthcare REIT is called LTC Properties. It mainly makes investments in senior housing and skilled nursing facilities that are backed by mortgage loans, triple net leases, and other structures for investing in the cash flow. With the help of this technique, the REIT can sustain its monthly dividend with relatively constant income. The pandemic had a severe impact on senior homes, which included LTC Properties tenants. Many had trouble paying their rent, which caused several of them to declare bankruptcy. However, this REIT weathered the storm and partially made up for the lost income with fresh investments because, to its strong financial position, it has been able to maintain its monthly dividend as a result. Number 3, Gladstone Commercial Corporation. The REIT Gladstone Commercial is diversified. Its primary holdings include net leased office and industrial properties in the United States, which together account for 48% of its portfolio, as well as a few retail and medical office buildings. Due to the higher investment yields offered by secondary markets, this REIT focuses on them as well. Gladstone has been able to pay a continuous dividend thanks to this strategy, which enables it to earn relatively reliable income. More than 200 straight months of dividend payments from this REIT has been at or above the previous month's level. It has low growth but a good yield. Number 2, Agree Realty. Real estate investment trust Agree Realty REIT. Due to the fact that they produce consistent rental revenue, these businesses frequently make for outstanding monthly dividend stocks. This REIT holds freestanding retail properties backed by triple net leases, which means the tenants are in charge of paying property taxes, insurance, and upkeep. It focuses on holding real estate that is leased to vital merchants, including groceries, home improvement, dollar stores, and medicine stores, which are less vulnerable to disruption from e-commerce or a downturn. Agree Realty can sustain its dividend with a consistent stream of rental income thanks to this tactic. In January 2021, Agree Realty changed their dividend payout pattern from quarterly to monthly. Overall, its dividend track record is really strong. Over the past 10 years, this REIT has boosted its dividend at a compound annual rate of 5.5%. Number 1, EPR Properties. Another REIT is EPR Properties. It focuses in owning experienced properties like movie theaters, eat and play establishments, ski resorts, and gambling establishments. It rents these properties from the owners of the venues under triple net agreements. Experiential real estate was significantly impacted by the COVID-19 epidemic. Many of these facilities were forced to temporarily shut down or operate at reduced capacity. Due to the impact on their capacity to pay rent, EPR Properties was compelled to halt its monthly dividend in 2020. However, now that vaccines are readily accessible, more people feel secure enough to once again enjoy activities away from home. As a result, EPR's tenants are paying their rent on time. As a result, this REIT was able to start paying dividends again in July 2021. So what do you think about our video? Do let us know in the comment box below. And by the way, please do like the video and subscribe to this channel for future updates.